So next time going to section 46. This is on liquidation of a company. At the time of liquidation, a shareholder has to pay capital gain tax. But now why shareholder has to pay capital gains tax? But what kind of capital gains? All that we have to understand. Okay. I have just given you a rough idea that at the time of liquidation, a shareholder has to pay capital gains tax. But how and why, I will discuss. I'll do one thing. I will give you some data right now. With that data, you try on your own. Okay, first let me convince why capital gains is coming, and then you try to do the calculation on your own. Okay. So first tell me why liquidation will create capital gains for a shareholder. Think about liquidation, means why liquidation will lead to capital gains for a shareholder. Tell me, in liquidation what happens? At the time of liquidation, first we sell all the assets and then we pay outside liabilities, and after the outside liabilities are settled, eventually we make the payment to shareholder, and when payment is made to shareholder, there comes capital gains. And you know why? Because if you notice, the conditions of capital gains are satisfied. Check the conditions. There must be capital asset, there must be transfer, so capital gains will be computed. So first check the conditions, satisfy yourself that yes, capital gains will come. But then how it will come, that we will see later on. Okay. So first capital gains will come, that I need to prove. So tell me, are these conditions being satisfied from a shareholder's point of view? Think you are a shareholder. So imagine if I am a shareholder, what is the capital asset with me? The shares which is holding, shares is a capital asset. So condition 1, there must be capital asset. So yes, shareholder has capital asset called shares. Second condition, there must be transfer. And you know definition of transfer is sarak. Now tell me, is anything happening from sale, exchange, relinquishment? Check one by one. In sarak, what is as sale? Sale. Is shareholder selling the shares? No, liquidation is taken place. At the time of liquidation, shareholder is not selling the shares. He holds shares, but there is no sale. But if you notice, there is relinquishment. In sarak, what is R? Relinquishment of a capital asset. And you know relinquishment means what? To give up, to surrender. And that is what happens at the time of liquidation. You know why? See, if I am a shareholder, you know at the time of liquidation what happens? All my shareholding rights I have to give up. I am no more a shareholder. That means I have to relinquish. Relinquish means I have to surrender and give up my rights. Why? Because the company itself has liquidated. See, if the company is going on, why will I give up my rights? Then I will exercise all my rights. I am a shareholder, give my dividend. I want to attend the meetings. I will exercise all my rights. But when? If the company is going on. But here the company is liquidated. And once the company liquidates, automatically a shareholder has to give up and surrender his shareholding rights. And whenever you have to give up something, it becomes relinquishment. So technically it is relinquishment in our keyword of sarak. And once it is a relinquishment, it is a transfer. So look here what I have written. There is a capital asset called shares. There is transfer in the name of relinquishment. And if both the conditions are satisfied, capital gains will be computed. And see, this transfer is also not free of cost. See, if a shareholder has to give up his shareholding rights, in return he is getting also something. What does he get? On liquidation he gets. At the time of liquidation, what a company does, they will sell the asset, they will pay off outside liabilities, and then they will give something to the shareholder. So see, if I think from shareholder's point of view, something is going and something I am getting. So what is going from my side? My shareholding rights. I am no more a shareholder. Till now I was proudly saying I am a shareholder of Reliance, but the company has liquidated. So I have to give up all my shareholding rights, but in return I will get some money from the company. Obviously there is always give and take. You lose something and you get something, that is giving rise to capital gains. And what you lost, your shareholding rights, but you are getting something in return. So that will give rise to capital gains. See, here I was simply proving that capital gains will come. Now the next question is how to calculate. How to calculate capital gains? For this I want you to try first. I will provide you with the data. You try and tell me what will be the amount of capital gains for the shareholder. See, I have proved that capital gain will come, but you tell me what will be the amount. Look at this data. I will read the data with you. Assume there is a shareholder, Mr. X, and he is having how much shares? 10%. See, 10% company share capital is 6 lakhs. Means I am assuming there are 60,000 shares of rupees 10 each, of which Mr. X is holding how much? 6,000. So he is a 10% shareholder, right? And then he purchased 6,000 shares in 2011-12 at a cost of 12,000. This data will be given in the question. And this is the balance sheet of the company which went for liquidation. Now you try and tell me what will be the amount of capital gains for the shareholder. Try. Students who are watching the video, please pause the video. First try, then listen to my explanation. Okay? Did you try? So see here. See, whenever I ask you what will be the amount of capital gains, you should start using this format. See, two things you fix in mind. If I ask you whether capital gains will come or not, you have to think in these lines. And if I ask you what will be the amount of capital gains, then you should use this format. So right now I asked you what will be the amount of capital gains. So use this format. Tell me one by one. First, in the format what we write? Full value of consideration. Tell me, what do you mean by consideration? Consideration means something in return. Tell me, for a shareholder, what has gone out? For a shareholder is shareholding rights. Till now he was proudly saying I am a shareholder, but now since the liquidation has taken place, he has to give up his shareholding rights. So what has been gone is shareholding rights. But in return, what he has received? Tell me, how much Mr. X would have received on liquidation? What belongs to the shareholder is share capital and reserves. Share capital reserves belong to shareholder. But tell me, does this entire share capital reserves belong to Mr. X single person? No, Mr. X is just a 10% shareholder. And for a 10% shareholder, he will get 10% of this, right? Why I am saying 10%? Because it is given in the question that Mr. X is a 10% shareholder. So tell me 10% of 8 lakhs. That comes to how much? Look here, 80,000. So look at my drawing. This means company will give 80,000 to Mr. X, who is the shareholder. And what shareholder gets? That is his consideration. So if you ask me what is the consideration, the answer is what? His consideration is how much? 80,000. Wait. His consideration is 80,000. And then continue further. Transfer expense assume not there. Net consideration 80,000. Then whether it is short term or long term, keep listening carefully. You will find one good climax now. Short term and long term. Tell me, short term or long term? The shares were acquired in 2011-12, and let's assume liquidation has taken place in 23-24. Obviously in May 24, November 24 exam, they will create liquidation in 23-24. So 11-12 shares were acquired and liquidation took place in 23-24. So the period is more than 1 year. Why did I say 1 year? Because for shares you have to think from 1 year's point of view. Assuming listed shares. If unlisted shares, then 2 years. But whether 1 or 2, the period is quite long. So it is long term. So long term then means what to do? Look here. Long term means I will deduct this. So I will cancel this index cost of acquisition, index cost of improvement. All this I will remove. Because I have removed. See, I have cancelled this. So what you will write? It is long term. So I will have to remove what? Cost of acquisition, and I will have to keep. Means I have removed the items of short term. Okay. And I have written index cost of acquisition because it is long term. So now tell me, index cost of acquisition, what is the formula? cost into index upon index. ऊपर transfer, नीचे purchase. ऊपर transfer means in the numerator year of transfer and in the denominator year of purchase. So substitute the figures. Say I'll do here cost. What is the cost? 12,000 into index upon index. Then in the numerator you will write the year of transfer and in the denominator year of purchase. Year of transfer is 23-24. So index for 23-24 is 348. Right? And what is the year of purchase? When did Mr. X buy his shares? 11-12. So what is the index for 11-12? 184. So tell me, accordingly you will get the index cost equation, and then there is no improvement because anyways in shares you don't have improvement. So whatever is the resulting answer, I am not writing that. This will be my long term capital gains, right? But this is wrong. You know what is wrong? Look here. This 80,000 you have wrongly taken over here. See, from no angle you will feel wrong, but it is wrong. You know why you will not feel wrong? Because see, what is FEOC? Full value of consideration. Consideration means something in return. And if you notice, as a shareholder, he has received from the company 80,000, and whatever he receives from the company, that is his consideration. So you should feel that this is right, but still it is wrong. You know why? Look here. First tell me, how did you calculate this 80,000? He is a 10% shareholder, and as a shareholder he has got right in the capital and the reserves, which was 8 lakhs. So you took 10% of that. But shareholders right in the reserves is treated as dividend, and dividend is income from other sources, so it cannot come in capital gains. You know, there is a concept of deemed dividend under section 222. You know, section 222 describes certain transactions, it doesn't look like dividend, but law treats it like a dividend. So liquidation is one of that. In liquidation, from no angle you feel like dividend. Liquidation means what you think? Company is winding up, company is winding up. You can never think about dividend. But you know, what does the word dividend mean? How does the word dividend come? Tell me. The word dividend is derived from what? Divide. The word dividend is derived from which word? Divide. And whenever company's reserves are divided, it is divided means dividend. We don't pronounce dividend. We pronounce it as a dividend. But why did I say dividend? I want to give you the feel of divide. Whenever companies, companies reserves is divided between the shareholder, it is nothing but dividend. See, a company might not announce dividend, blah, 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 because what company will announce? Company shut down. But at the time of shutting down the company, reserves are not just thrown away. They are distributed to the shareholders. And whenever reserves are divided, feel the word divided. So divided means dividend. So it is dividend. As per section 222C. So tell me, for Mr. X, what is his share in the reserves? Reserves is 2 lakhs, but entire 2 lakhs is not of Mr. X. If I am Mr. X, I am a 10% shareholder. So how much I will get in the reserves? 10%, so 20,000. So see here, to the extent of 20,000 rupees. How did I get this? His share in the reserves of 2 lakhs. To the extent of 20,000, we will call it as deemed dividend under section 222C. You know why it is called deemed dividend? Deemed means assumed to be dividend. And why it has to be assumed? Because officially there is no announcement of dividend because the company is being liquidated. But see, law says whether you announce it like a dividend or you don't announce it. Whenever we see reserves are being distributed amongst the shareholder, we can see dividing of reserves. And dividing of reserves means dividend. But people will not accept this as dividend. That's why law says deemed dividend. Deemed means assumed to be dividend. But tell me, dividend can be assumed only for 2 lakhs. In that also, Mr. X is a 10% shareholder, so for him it will be 20,000. So tell me, if Mr. X has received 80,000 from the company, out of which if 20,000 is shown in income from other sources, so how can it come again in capital gains? And you know what we did? We wrote entire 80,000, which includes that dividend component also. So imagine you are doubly taxing. 20,000 you want to show in income from other source also, and in capital gains also. Don't you think it will amount to double tax? That's why here you will write only 60,000. The amount which he received towards his capital. What was the capital of the company? 6 lakhs. And towards capital he got 10%. 10% of 6 lakhs is what? 60,000. This will come in full value of consideration in capital gain. See, I have written here FEOC. And this 60,000 I will write here now. I will cancel this 80,000 which was wrong. So tell me, what should I write now? 60,000 will come here. 60,000. Okay. So wasn't this a good point? 99% students will commit what mistake? They will simply write 80,000 and they will feel the question was simple. See, apparently it looks very simple, but then taking 80,000 is wrong. This doesn't strike to anyone. Because see, here I am explaining, you are not realizing, but at least now you have learned. So make a rule. Look, whenever company is liquidated, you should see first reserves. If there is reserves in the balance sheet, first preference should be given to dividend, then comes anything in capital gains. Tell me, what if the company's balance sheet didn't have reserves? What if the company's balance sheet didn't have reserves? Imagine the reserves was not there. The balance sheet was without reserves. Then if there is no reserves, then there cannot be deemed dividend. Because dividend means dividing of the reserves between the shareholders. But dividing of reserves, so for that reserves has to be there. So if there is no reserves, then there is no deemed dividend. Then the entire amount will go in capital gains. In short, first you should check whether you have reserves in the balance sheet, and then don't take the entire reserves. We are solving the sum of a particular shareholder. So we have to see his share. And his share in my example is 10%. So just take 10% of that. Remove that, balance will be full value of consideration. See, actually, the way to interpret this is what? Look, listen to my sentence. Towards shares, associate invested 12,000. And towards shares, he received 60,000. See, 20,000 he received towards reserves. But capital gains is for shares. So tell me, towards shares, what went and what came? Towards shares. So tell me, towards shares, you had spent 12,000 as cost. And towards shares, you received 60,000. See, 60,000 is towards shares only. It came from share capital. Share capital. So see, this is the way you should interpret that towards shares, I had invested 12,000. And towards those shares, I am getting 60,000. You know why it is happening that you invested 12, but you received 60? Because you might have purchased a share from the open market. And maybe in stock exchange, the prices were low when you acquired. Assume you acquired in 11, 12. So you might have acquired for 2 rupees per share. 2 rupees means 6,000 was the number of shares. So multiply by 2 comes to how much? 12,000. So it is quite possible that in the stock exchange, shares were available for 2 rupees. So 2 into 6,000, you had incurred only 12,000. But on liquidation, company's commitment is they will give you the face value. No matter in the stock exchange, the prices are of rupee 1, rupee 2. So when you buy from the stock exchange, you pay less. But at the time of liquidation, company will repay based on the face value. So I am justifying how a shareholder made a gain. That from the stock exchange, when he got, it was at a price of 12,000. But on liquidation, he will get the face value. And as per the face value, he should get 60,000. Not full 6 lakh, he is a 10%. So 60,000. That makes him feel the gain. Okay, now look here, look. This working which I have done, Don't you think this working was the main thing? Now, this working is actually given in the Act in the form of a format. If you see section 46 in the Bare Act, they have given, look at the screen and tell me, they have given this working as a format. So, now what I am doing, I am converting these figures into a format given by the law. See, I have written here, look at this. Can you read? See what has come on the screen now. This format is given in the Act. See, let us read together. What is given? Money and money value of other assets received at the time of liquidation. Tell me, why do we say money and money value of other assets? See, what law is trying to say, on liquidation, shareholder might receive money or he might receive some asset. So if he has received money, check how much he has received. Or if he has received some asset, check the market value of that. Usually when a public company is liquidated, they give money at the time of liquidation. But sometimes a private company where only 5-6 shareholders are there, so it is possible that a private company while liquidation, it might give away the asset to the shareholder. So if the company has given an asset to the shareholder, you should take the market value of that. This is what is written here. See, I am talking about this 80,000 only. But this 80,000 can be money also. It can be some assets market value also. So whatever it is written in the law like this. Read together with me. Money or money value of other assets. Other asset means other than money. Money is also asset. But other than money, some land, machinery, etc. Some other assets market value. See, this FMV is what this market value. This money value is nothing but the fair market value. Which in my example it was how much? 80,000. Out of which, read what I have written. His share in reserves. His share in reserve was 20,000, which is deemed dividend under section 222C, and that goes to income from other source, and even that is taxable. Nowadays dividend income is taxable. So this will be taxable under the head income from other sources. And what is the balance? Balance means 80,000 minus 20,000, balance is 60,000. That is counted in full value of consideration. In short, same thing, but I am just saying that in the Act they have given a format like this. Okay, now tell me, look, I am making one change. Please look at this. If instead of 80,000 cash, Mr. X shareholder has received land, then what to do? And assume, see, can you see the land in the balance sheet? There is a land in the balance sheet which has a cost of 0.5 lakhs, means 50,000. So 50,000 is the book value of the land. And assume this land is given to the shareholder in settlement. And coincidentally the land has a market value of 80,000 only. And coincidentally shareholder was to be given 80,000 only. So let's assume that 80,000 which company wanted to give to shareholder X, they have given in the form of a land. So tell me, will there be change in the answer? No change. See, whether company gives him money or company gives him land, you have to take it here at the top. And then you have to bifurcate into two parts. So even if the question says that company gave him a land, so write the market value of the land. And let us assume the market value is coincidentally 80,000 only, which company was supposed to give to the shareholder. So from 80,000 you will do the bifurcation and everything will be same. In short, what I meant to say, whether company gives him money or land, it will be same. So this completes section 46, liquidation. Section 46, liquidation. Okay.